I'm Nick Roper. I'm the president of Roper Valuation and Insurance Advisors. We're an independent consulting firm. I'm a chartered insurance professional and a CPA accountant, and largely focused on business interruption. So, as Tom said, BI has been a big focus in the last year, and we're going to talk a little bit about that today and where I think BI is going in the future here. So, just a little bit about me. Get the slides ready. There we go. So I'm with Roper Valuation. We do both pre-loss, business interruption reviews, looking at calculating proper BI limits. I know limits is a big thing in the BI world. We help brokers and their clients work through creating effective BI programs on the front end, pre-loss, and then on the back end, post-loss. We're there with the clients, valuing their BI loss, coming in that forensic accountant role, really to proactively value the loss on behalf of insureds, typically falling under that professional fees cover when that's available there. So I've worked with Trufla. I know the guys there well. I've entered the tech world myself, developing a business interruption submission tool, an online tool, BII web app. You can see that the logo there on the screen. And really the intention behind that is to improve the whole BI submission process and create detailed submissions that provide a lot more underwriting information, gets the limits right, aligns the limits with the policy wordings, which is so important, and just does supports brokers and the clients and underwriters to receive the information that they need to properly put a BII program together. So all interesting stuff. I think, as I say, BII is a big focus for me. So I can talk about it all day, every day. I've got my contact details there as well, my email, my phone number. I've put it in there because I encourage people to reach out to me, ask questions about something I might say today. If you want more information, or if you disagree even, pick up the phone. I love to talk about this kind of stuff because I really do think that I think of insurance as a bit of an art form. I think the general public treats it like a bit of a commodity type thing, but certainly when you get into the commercial world, I think of it more as an art form. And so I think there's a lot to be said about having these conversations, working through how coverage works. For you brokers out there, I think there's real skill sets in how you present risks and explain risks and work through that. So I think of all that as an art form, and I think that certainly applies to BI as well, because I think it's so subjective. You're basically saying, tell me what I would have done had this not happened, and so that's a very difficult thing to work through, and has it can be very subjective. So anyway, so I love to talk about this stuff. So there's my contact details. Quick agenda, just to set the stage. What is business interruption insurance? I'm sure everyone's quite familiar with it, but I thought let's just work through the basics. Then I'm going to talk about the pandemic. It's been a big, interesting year for everyone, and BI and the pandemic's obviously been at the forefront. Although, interestingly enough, I was playing a Jeopardy game the other day, and I think one of the questions was, what is the most Googled subject? I think it was in North America, and the pandemic was number 2. Number 1 was the U.S. elections or Trump or something like that. So amazing how much attention is on U.S. politics at the moment, or at least leading into the election. Anyway, so we're going to then go into trends, challenges, and opportunities from there. So first, what is business interruption? At its core, the purpose of BI is to insure against the loss of income resulting from damage to insured property or premise caused by a covered peril such as fire, wind, or water. So I'm focusing on this as a starting point, really to show how rigid BI is at its core and how important that damage element really is for a lot of the core standard business interruption policies. And the coverage is really tied to premise, location, insured property, when in reality, an income exposure could be anything tied to any loss of income resulting from an unforeseen or fortuitous event, anything that can be quantified, is measurable, and ultimately anything that can be transferred to insurers and that they're willing to take on the risk and can price accordingly. So I think where we're going to see BI going is a broader scope when we think of BI from this this traditional approach here. So what does BI do? We think of loss of income, but what does that mean? It enables businesses to continue to pay their operating expenses, things like salaries, rent, debt obligations, as well as pay for increased costs to mitigate the loss. It allows a company to maintain profit levels. And ultimately, I think it's critical coverage to allow businesses to ultimately survive a loss. So BII, it's been around for a long time. I think, up until recent years, it probably hasn't changed that much. Even back in these old articles, the focus is physical damage resultant from fire, explosion, windstorm. So not a lot of change there. But even then, it was focused on as being an important part of a client's insurance program needed to really complete their insurance protection. So when we think of BI, this is what we think of. Retail store suffers fire damage, and during the loss period, they're not able to sell their merchandise out of that location, and so they're struggling with the loss of income arising out of that. But that's what a traditional BI policy does well. That's kind of where BI came from. But businesses are so much more complex these days, and so I think we're going to see the scope around BI changing. So I've listed a number of exposures that I would say are not part of the core traditional scope of what BI is. A lot of these exposures you can add in through endorsements or extensions, but the coverages are ultimately limited, small sublimits, those kind of things, when for a lot of businesses, these might be core risks to them. So, one of the things I wanted to really kind of focus on here is multiple locations and interdependencies, because what I see a lot is this struggle about applying policy wordings when you're talking about multiple locations. And I think, again, that speaks to where I think BI is going. I think interdependencies, integration is going to become a big thing. And so I think even when we're talking, your traditional fire risks, when a business has multiple locations, it adds a lot of complexity. Are the locations interdependent, which means I might be a manufacturing company with 3 locations, but I might manufacture part of my product, my widgets, in each of the locations. A damage at any one of the locations might cause a loss of income. So that is an example of some integration that I think BI policies struggle with a little bit. Certainly your core policies, I believe. So just to say, businesses, they're more complex. So I think BI struggles with this a little bit, but we're going to start seeing a lot more focus and attention to that. I was going to just highlight how important BI is. I think it doesn't get the attention it needs, but it is a key critical risk. So I've got the Allianz Risk Barometer 2020. I use these risk barometers quite a bit when I'm giving presentations because I find they are they have some great information in here. So BI has ranked as a top risk for a lot of years. You can see on the left there. It's actually 7 years that it was ranked at #1, and then for 2020 it dropped to #2 behind cyber. And in reality, business interruption has a lot to do with cyber as well. But BI being a large, important exposure for a lot of industries, you can see they're big, important industries as well. It's the #1 risk in Canada according to the 2020 risk report. So that was my slide that I developed up until yesterday, and then of course the new report was released yesterday morning, and BI was back at #1. And no surprise, pandemic outbreak and cyber incidents are all #1, with a lot of the risk managers out there saying that it's their top risk. Oh, and I forgot to. So this Allianz risk report, Allianz is one of the biggest insurers in the world. This barometer that they do is a survey of 2,000 or 3,000 risk managers and consultants, professionals around the world, asking them to identify their top risks. And so I think it's a really good report, and encourage people to take a look at that. And interestingly enough, 2020, so the report that came out January 2020, just wanted to point out where the pandemic risk sat, number 17, right at the bottom of the list, just before other. So, you know, pandemic was, while it was a risk that was out there, people were recognizing it. I don't think a lot of weight was being put to pandemics until this year. So this is just again, we're setting the stage here, setting the stage that BI is quite a critical, important coverage, and yet I think the uptake is still low. I've got a couple stats here that says that only 40% of businesses purchase business interruption company. This is small, mid-sized businesses, which means 2/3 of those businesses out there don't have BI coverage, which is surprising to me. And I don't know if it's a lack of understanding around how the coverage works and the intention behind it, or if there's a lack of a perceived risk there. And I'll talk to that in a sec. But even when coverage is in place, I've got a stat here from the Chartered Institute of Loss Adjusters saying that 40% of all BI declarations are too low by 45%. So that even when the coverage is purchased, it's often inadequate coverage, and that's purely talking about limits. I think there's issues around applying coverage, understanding how the coverage works. So this is all interesting to me because in my mind, the reason a business exists is to generate income and then to be able to do things with that income. And so your income should be your priority and your first thing that you should be ensuring. So I thought just to summarize this stage setting that we're doing, BI is not new. I don't think it's changed for a long time, but we're starting to see that. It's critical coverages for businesses to survive a loss. It doesn't handle complex risks very well unless it's given the proper attention and customization in order to ensure that it does address a business's risks. Income-related exposures are complex, and I think we're going to see that move away from this physical damage tied directly to a premises or a insured piece of equipment. And so with the way businesses are developing, policies need to and are starting to evolve. It's a top risk for businesses, but yet it has not received, historically, in my opinion, the attention it deserves. And so, again, a lot of businesses, small, medium-sized businesses, don't actually purchase the cover, which is surprising to me. And then along came 2020 with the pandemic front and center. Business interruption was always all of a sudden front of mind for a lot of businesses. They were dusting off their policies or giving their brokers a call to say, hey, is this impact to my business covered? And of course, for a lot of businesses, it hasn't been covered. But it was the first time for a lot of businesses that they were experiencing and understood what a fortuitous event can do to their operations and their ability to generate sales and cover their costs. So for the first time, they were in a situation where revenues, well, a lot of businesses actually shut down, as we all know, but the ones that stayed open were limping along with reduced sales and trying to manage their costs and continue to pay their staff. And a lot of them were thinking of ways to reinvent themselves in an attempt to mitigate the impact of this situation. And that's a lot like a BI loss. That is what a BI loss is. And so for a lot of businesses, I think it was the first time that they focused on, hey, I've got an income exposure here. And I think that's going to be a catalyst moving forward to say, you know, this is something we need to look at. And the pandemic obviously was something that, well, say obviously, a lot of the arguments are that it didn't trigger the physical damage required under a BI policy. There's arguments out there. There's been lots of lawsuits, you know, class actions, things like that have been filed. I don't think any of those have gone through the systems yet in Canada, but it's interesting. I think from the perspective that a lot of businesses are going to change their perspectives on BI and income protection moving forward. So now I say that, but as of I say that for a lot of businesses, this impact has not been covered. But watch this space a little bit. We've got in the UK, as of last Friday, we had the Supreme Court rule on this FCA test case, which was basically trying to address whether or not business interruption coverage was triggered, and in the test case, they decided that it was a triggering cause for BI coverage. Now, what it did do, the focus of this group was from the perspective of civil authority or infectious disease type coverages. It did not attack the physical damage aspect with COVID triggering a physical damage cover on the policy to trigger the BI loss. But it is interesting that it did trigger the civil authority infectious disease side of things. And I think it's from a Canadian perspective, it's interesting because our courts follow the UK mindset to some extent. So it'll be interesting to see what that does here. Now, I think the general feel is that the UK policy forms were perhaps a bit broader in their wording, and so maybe it won't have the same effect here, because as we all know, it really comes down to what the policy says. But so that's interesting there, and I think around the world these same cases are going on. And I thought I would just mention one in the US, in North Carolina, where they actually did accept the physical damage argument from the perspective of loss of use of property. So I think that was a surprising judgment there, because I think in the US definitely most of the decisions have said that that the pandemic doesn't trigger the BI coverages. So I think we all know, as insurance professionals, there's a lot of talk around pandemics and whether that's the intention of commercial insurance. And in my views, pandemics are an event, certainly on a global scale, that go against the fundamentals of insurance that says the premiums of the many pay for the losses of the few. And so when we've got a complete global-wide pandemic like this, that's a loss of a magnitude that the commercial insurance market was not intending to cover, in my opinion. So what's interesting about that is that we're going to see perhaps more government-backed programs, and I think there's discussions in Canada and the US, as you can see here, that are going to perhaps be put in place to address if something like this should happen going forward. And I think, interestingly enough, given the hard market we're all in, I think there's actually even government programs out there, government discussions with government to address some of the hard market issues as well. So just to say that I think when we're talking scale such as this, it's the governments often come in, and of course the Canadian government has put a lot of subsidies and stuff in place as well. So just a side note on how this pandemic's all played out. So as I say, I think there's going to be a lot more focus on BI and a broader scope of BI, and we can't talk about where BI is going without talking about where businesses are going. And so I think the fact that we've entered this Industry 4.0, this fourth revolution, industrial revolution, I think shows where businesses are going. And it's all about connectivity and integration. So integration is a key word. If you take anything from the presentation today, is we're all more integrated, and so coverages around that integration and the loss of income around that integration, I think, are going to become super important going forward. And so this Industry 4.0 talks about, there's a lot of digital platforms and information systems out there, but it's not just the digital world too. That then ties into the physical world of automation and the controlling of machinery and that kind of thing. So we've got this big interconnected world that's coming about, and so I think BI policies are starting to respond. We're only at the very front edge of that, but that I think is where BI is going to go. So we can't talk about technology and BI without thinking cyber. It's a big buzzword. Everyone's on cyber. It's a big key risk, and I think thinking about where cyber has come from in the insurance market, it originally started with the focus on security breaches and the loss of confidential information. It then moved into more of a first-party ransomware cost to reestablish system servers, digital infrastructure, and then the BI focus came about as well. And so you can see from this that actually BI is a major factor in cyber claims. And according to this, another Allianz stat, 60% of the value of these cyber claims that they looked at was was as a result of BI losses and the disruption to systems and the downtimes associated with that. So while cyber has come from a focus of malicious attacks, and I think that's very important, ransomwares are growing and are a big deal. I think coverages so far are very focused on malicious attacks. I think there's a broader scope that will come into play here. We'll start talking more about non-malicious concepts, technical failures, system breakdowns, really any kind of unforeseen fortuitous event that causes an outage to these infrastructures, these information systems, these digital platforms, connectivity, human error, power outages. And this failure can be on the digital side, but it can be on the the software side. It can be on the hardware side as well. And one example of that, a big example that was in the news, I guess a couple of years ago now, was when British Airways, their IT system crashed, and they had to cancel thousands of flights. I think the estimates are that it cost them 150 million pounds. I think at the time everyone thought it was this attack, this malicious attack. I even remember at that time my mother was traveling at the time, and she actually came into Heathrow while this was all going on, and the feeling in the airport was that this was terrorism. It was malicious, but they actually tied this all back to a contractor who had switched the power off. So it was a power outage. There was nothing malicious about it, but it caused a massive loss. And I think the second step to that was when they tried to reboot systems and bring everything back online, there was a big power surge, and then it caused physical damage to the infrastructure, the servers, and all of that. So I really wanted to highlight that I think while malicious attacks are a big deal and big focus, and rightly so, I think from a BI perspective, we're going to be thinking broader than that. And I think we're also going to be thinking more about dependent loss of business income from a cyber perspective. So this is kind of your contingent cyber. When we realize that, again, systems are integrated, there's my word of the day, integration. Digital platforms are talking to each other. No software stands in isolation these days. They're all controlling systems. It's third-party systems that are plugging into first-party systems, and so that integration is going to play a big part. And I think we're starting to see some of those coverages come along, but they're going to be slow-moving. And I think a lot of that, the reason why it's slow-moving, I think, is just, and I'm sure everyone's aware, the cyber market's suffering a lot of high loss ratios. I mean, we're in a hard market in general, but certainly cyber's suffering from a lot of significant loss ratios. So I think anytime that happens, we're going to see slow movement into some of these broader scopes of coverage, because we really are at the front edge of cyber and knowing what the true exposures are. And I think from from a contingent perspective, that is very important, because being able to understand the extent of exposure when you start talking about the integration into other things, I think is going to be a challenge for the industry. But I think technology, big data, those kind of things are really going to be able to help solve that issue, but it's going to be a progress to get there. So I've got just a slide here that I pulled off a site to show how systems are integrated. You've got ERP systems talking to CRM systems, might be talking to e-commerce sites like your Amazons and your Shopifys. Some of these systems might actually be functionally controlling physical equipment. And so that really speaks to that integration and interconnectivity. And there's even systems out there that control the interplay between these software. So there are services that then manage how all these systems plug into each other. And so that's, to me, is a really interesting kind of new form of business out there that is really going to be important. I think so many businesses are really relying on their digital platforms, their information systems to control their operations. And so that, I think, is where a lot of the focus is going to be. I found some interesting quotes, but I thought this one was particularly good from the CEO of CyberCube, and really just to stress that, I think the industry as a whole has got a long way to go in terms of truly covering that BI exposure from a cyber perspective. We're only scratching the surface of it in terms of coverages and understanding the exposures. So this is going to be a long road before we're truly getting it. But I think this is where BI is going to go. So beyond cyber is cyber is the focus, technology, but I think we got to think broader than that. Back to the comments on pandemic, where I think businesses are going to start thinking beyond physical damage. Infectious disease and pandemic has brought that to the forefront. I think contingent BI is playing a bigger role. I spoke with one of the managers of one of the big adjusting firms not too long ago and asked him what's the trend he's seeing in BI, and his answer was contingent BI. They were surprised over the last year or two how many contingent BI claims they are seeing, and I think that really points to where the industry is going and the broader perspective of risk and clients and brokers pushing for that coverage, and of course then resulting in the losses as well. I think historically contingent's been a difficult element to cover. I think that's largely tied to the inability to truly perform the underwriting analysis, understand the exposures tied to that third-party location. But I think technology is probably going to play a big part in being able to offer more of those coverages. There's companies out there like it's Zesty, where it's actually, I think they've got a couple 100 billion data points on properties around the world. And so I think a lot of that technology is going to come into play to be able to allow underwriters to understand, hey, I might have that third-party manufacturer in China, but I can go and pull data from this big data that's out there that I might be able to underwrite and get comfortable with that exposure, that contingent exposure, in a much better way than we've been able to in the past. There's also non-damage BI. I think it's going to become a bigger thing. Parametric insurance is a bit of a new, it's a new term. I don't think it's necessarily new coverage. It's kind of a derivative form coverage that's been around, but it's coming to the forefront. And I think technology is probably pushing it there. You can see Irish InsurTech Blink has launched a new parametric solution. And I think Matthew Grant yesterday spoke to it well. And I think just quickly, parametric insurance is where the loss is not actually an indemnification loss. We're not actually trying to value what the loss of income what the loss of income was as a result of, say, a physical damage. It's a predetermined set amount, a set payout that gets released as soon as a certain trigger is met. So if an earthquake above 6 on the Richter scale in California happens and within a certain region or whatever, that will trigger an automatic payout. And so I think that's interesting for a lot of businesses that may not even have their own physical property there. I think of like an Airbnb or something that might have a lot of homes and facilities that they don't actually own that are in California, and California might be a big income source for them, and they know that an earthquake or those forest fires or something might actually trigger quite a big loss for an Airbnb. So they might think about something like a parametric insurance where they don't actually have to suffer that physical damage. And so it'll be interesting to see, and I'm particularly interested to see how that scales up maybe into the commercial market and into some of those bigger programs. I think a lot of it at the moment is coming out of things like trip cancellation cover and things like that. But I think the same concept can apply to bigger business. So it'll be interesting to see where that goes. The gig economy is super interesting. These are things like your Uber drivers, your freelance IT developers, and those kind of things. People going out there and generating their own income on a freelance basis. That's all tied often to these digital platforms and apps, Skip the Dishes and those kind of things, where there's that digital platform, but you've got this new exposure where it's an independent business, a small business owner, independent contractor who might want some income coverage. And so it'll be interesting to see where that falls and what products come out of the market with that. So I think in general with BI, you're going to see a lot of specialization, a lot of specialized coverages and markets, really trying to hone in on some of these unique risks. And I think, again, in thinking of this integration and the broader spectrum of risks, one of the coverages that's particularly interesting to me is trade disruption insurance. And I think this isn't anything that's particularly new, and I think it came more out of the cargo transit world. But it's a coverage that focuses on the loss of income arising out of unforeseen event. So trade disruption often has cover for political risks, or when a piece of transit can't reach the port and so it misses its shipment, and those losses that aren't physical damage but can cause a loss of income. And it was particularly interesting to me because I'm looking at it for a particular client who actually has that contingent risk where they've got a manufacturer overseas, and so we're talking with trade disruption on whether or not they'd be able to tackle that manufacturing risk as well. And so bring in all those broader spectrum of coverages, but apply it to a contingent BI basis with that manufacturer. Because the interesting thing there is this client, their manufacturer might be overseas. They send some of the products to my clients in the US, Canada, to their warehouses there, but they also send a large portion of that directly to the big box retailers. So that direct supplier to retailer doesn't necessarily fall into that contingent BI box, the rigidity of that contingent BI box. I wonder where some of these specialized markets, like a trade disruption insurance, whether or not that's going to step up and provide some of those kind of coverages. I think things like equipment breakdown. I mean, we all know equipment breakdown. I think in my mind, it's a coverage that sometimes gets tacked on without too much thought process. But I think when we start thinking broader cyber, and we start thinking system failures, and how these systems might be tied into the physical equipment, there's overlap there. And I think we're already starting to see, but we're going to see more come out of the equipment breakdown world. And from a BI perspective, I think equipment breakdown for a lot of businesses is super important. And so I think it's going to perhaps bring that coverage more to the forefront as well. So I think that's going to be very interesting to see where that goes going forward. So again, I think it's just to harp on it, it ties back to that integration, that interconnectivity. And just to speak more to that, I thought I'd put up a slide, just show some of the new ways businesses are business is being done. I think everyone's familiar with the Amazons and whatnot, but we've got a company like Ocado in the UK where they're a grocery company, but they don't think of themselves as a grocery company. They're a tech firm, and this is a picture of their digital warehouse, and all these robots are moving around, pulling inventory and sorting out orders, and it's all controlled digitally. And so it's a new tech business, but a very old function of selling groceries. And Ocado's controls a lot of the supply chain with inventory management, and they do a lot of the shipping, and it's all controlled and organized with these digital platforms. And so, the traditional risks are all very much still there. And I think Ocado actually suffered I saw in the news that Ocado had suffered a fairly large fire at one of its warehouses in the last year or two. So those traditional risks are very much there, but I would expect that their big priority and focus is their digital platform and controlling all of these systems and the complexity around that. And so that's really interesting. You've got businesses where the data itself is a service, where the ability to access data and analyze the data and pull information from this big data that they've collected is a service in itself. So that accessibility and that system failure, I think, is such an important risk for them that they're going to want coverage for. And of course, the malicious attacks are still there, but they're so heavily reliant on that digital platform. Airbnb, I talked to them, and they're interesting. They're obviously very digitally based as well, but maybe some of those parametric coverages will play a role there. I've got this drop shipping model here. I chatted with a couple underwriters and discussed this whole model and how this whole supplier to customer channel isn't necessarily a true contingent BI risk, because I think when you think contingent BI, you think more of supplies coming to your location, or sending those supplies out to a customer. The fact that BI is very much tied to a location. So I insure my warehouse. And so from a contingent BI perspective, I can cover the fact that I'm reliant on a supplier to ship me my raw materials or whatever it is, or that I'm going to send to a customer's warehouse. But it still kind of hinges on the fact that you're purchasing that first party PD cover and BI cover tied to your location, where we've got a lot of situations where supplier to retailer, and you're in the middle as a web store, whatever it is, like the example of my client that has the overseas manufacturing, and it sends directly to the big box retailers. And I think that maybe goes outside of what a kind of a true core traditional property market will look at. So maybe there's going to be more specialized markets that come into play on that. Things like smart delivery, like these robots, Prime and FedEx robots there, drone deliveries, those kind of things. These are all just new ways of doing business where the traditional risks are still there, but we're expanding, we're adding on with some of the technological aspect that really brings in new risk exposures. And I think we're just at the very front end of understanding all that and understanding the exposures around it, and then applying the wordings to it. I think that's a big deal as well. When you think of cyber, I think one of the big things that most cyber specialists would say, and cyber coverage specialists would say, is that there's a lack of continuity across policy wordings in terms of definitions. I mean, what is a system failure to one policy is totally different to a system failure to another policy. Even to the fact with my BI tool that I developed, the system failure wording and the coverage that I've got on that still uses the malicious attack basis for defining its system failure. So we really got to challenge whether or not there's the ability to add in that broader spectrum of failure not resulting from malicious attack. So even knowing firsthand where these cyber policies are today and where I think they are going to go, and ultimately where they need to go. So with that being said, I think there's going to be challenges. I've talked to a few already, but I think most brokers would agree that BI is a coverage that is a struggle. Understanding the exposure. I think most underwriters would agree that BI is often underfunded on their side. And then on the insured side, there's a lot of issues with coinsurance. Thinking back to that quote that I had earlier, but just understanding the exposure around BI has always been a complicated thing in my mind. So I think it needs more attention. But I think that those traditional issues are still going to be there, and I think they're probably just going to grow as complexity grows. Again, integration. Have I said it enough? Integration, contingent BI risks. As I say, they've been traditionally difficult to insure. Understanding the exposures around that contingent risk has traditionally been so difficult. But I think big data is going to come to the rescue on that. We're just going to be able to get all that third-party information to some extent just by what data is available out there. And I think with any time a new products come on, new exposures are identified, I think a lot of that comes from the brokers and the clients pushing for coverages. And I think when we think of cyber and some of these other new forms, I think a lot of that responsibility is being pushed on brokers to identify exposures, to establish what the limits and the extent of that exposure is, because the market itself, I think, is still very at the front end and not necessarily understanding what the true exposure is. And then that, of course, ties into why cyber has such poor loss ratios. This concept of silent cyber, which is basically just saying, I think insurers have basically found that they've exposed themselves to more risk than what they initially had thought as we start getting further into this cyber world and understanding what the true exposures are. I've spoken about how these policy wordings, start out, they always come from pulling other forms of wordings and piecing them together. And sometimes I think there are growing pains to actually apply coverage to risks. As claims start to happen, we get a better sense of how the wordings apply to certain situations, certain exposures, certain losses. So that'll need to improve and grow as we move forward. Just in general, I think the world needs a better approach to BI. I think there needs to be better knowledge out there. There's a lot of misunderstandings and miscommunication and how BI works, how the limits are to be calculated, what the limits are meant to represent. And so I think the industry needs more structure on that. And my plug here is that's what I'm trying to work through with my app here, is to provide that structured approach in determining limits, presenting the information that is relevant for clients, businesses, and underwriters to understand the exposure, rate it appropriately, make sure the coverage applies properly when it needs to. And so I think that is such an important thing going forward. And I think that basically is going to provide the footing that is required as things get more complex and this integration becomes more complex. We're going to need that core structure, even with the traditional risks. That core structure is going to need to be there. So I think that's just so important. I see when I come in on losses or come in to help companies put their BIs together, I'm often seeing things where coverages don't apply to certain issues, like interdependent locations, multiple locations, things like ordinary payroll get missed, and some of those kind of things. Just again, because I don't think there's that attention. I think the BI worksheets are good, but I don't think they can be relied on. I think too often they get relied on, and so a lot of the application of coverage and identification of exposures gets missed. So I think as a whole, I think the industry needs to do a better job on BI and addressing it, bringing it to the forefront, working through the issues at renewal, and so that's going to be important as we move forward. But I think it's all ultimately a big opportunity for brokers. It's new industries, new exposures, new policies to sell. And I think BI is really that area where brokers can differentiate themselves. I think a lot of brokers struggle with the BI concept and how coverage works a lot. When we talk BI, it's coverages aligning with the financial world, the accounting world, and I think everyone recognizes brokers aren't expected to be accountants. But in order to get BI right, there is that bringing together of the two worlds. And so I think brokers find they struggle with that. But I really think to get in and be able to address a business's BI risk is really an area where they can excel and set themselves apart. And as I've said here, I think to better understand the company's BI risk is really to better understand the company. And I think that'll come across in dealing with those customers and really show the expertise, knowledge, services that come with brokers that do focus on BI. As I said, I think BI is where the focus needs to be. And so, we'll see where the world takes us. But it's been an interesting year. I think the pandemic's brought BI to the forefront, made everyone focus on a broader scope of risks, the idea of disease, non-damage triggers, parametric triggers, contingent losses. Those are all going to be where BI goes. So that's me for today. If there are any questions, I don't know if Tom or any of the Truthful guys are there to step in.
Hey there, Nick.
Hey, Tom.
Thank you so much. And so everyone, just feel free to throw your questions into the chat. We're going to get to as many as we can. Nick, some questions that came in earlier, and actually you were just kind of chatting about it. With BI being so tightly kind of wrapped up with companies' finances, when it comes to payroll, things like that. Oh, sorry, there's a little bit of echo there. For brokers that are having trouble writing this kind of risk, like what kind of advice do you give them, when it comes to dealing with some of the financial aspects of writing a BII policy?
Ultimately, as I think I said, no one's expecting a broker to be an accountant and have that financial expertise. But I think the key point is that coverage needs to wrap around that. So I think there is still an expectation that we need to make sure that the coverage applies in the way that it needs to. So again, if you've got multiple locations, you've got to make sure that they're interdependent. Does your wording speak to that interdependency? Do we know that an event or damage at any of the locations can cover that loss? Or do we need to move to a blanket approach? Those kind of things. Do we, is this a policy that needs ordinary payroll extension or not? Explaining the exposures. Do we, is extra expense really what we need? I mean, there are businesses out there where the BI risk is low. It's really the extra expense that's important. And I think of a nonprofit that I worked on. It was a theater where they had a fire, and the building was completely destroyed, and they were able to still host their plays and stuff by the fact that the community had said, "Hey, come use our space." Right? There was a lot of vacant space that they could move into, and so their focus really was having that extra expense coverage to pay for the costs of setting up and moving to all of these locations. So their BI loss itself was pretty low, but it was recognizing they needed those other forms of coverage. And so I think that's one of my struggles with worksheets, is that they help to frame the mind around how the limits are calculated, but it doesn't help to frame the risk and how the coverage wraps around all of that.
Yeah, no, thanks for that. So I'm just fixing this mic here. Here we go. So the one question I had, for a lot of the brokers on the call, what are some tips you can give them to help them sell more, or even sell better to their current clients?
Well, I think one thing is, we've got the best test case that's happened. We've got the pandemic. I mean, think back to how the pandemic has impacted them, and think that is very much similar to how a BI loss operates. And I think one of the key things to remember, and one of the things that I think often gets missed, is that, for the insurance perspective out there, oftentimes we're thinking of total loss. My building's totally gone. I've totally lost my machinery. But those are the losses that happen the most infrequently. But the majority of losses are, I've suffered damage. I'm struggling to maintain operations. My sales have cut in half. And so I've got all these costs that are continuing. I've still got all my staff. I've still got all my bills to pay, but I'm doing it with half the revenue. And again, that's very much like the pandemic was. And so I think that perspective and being able to use the pandemic is a great way to focus people's attention on BI and needing it to be at the forefront of their minds going forward.
Yeah, and actually, oh, sorry, there was a little feedback. You mentioned one thing I thought was really interesting, with more and more brokers and actually just companies in general, everyone is kind of relying on digital systems. Do you think brokers kind of have a bit more of a responsibility when it comes to pushing cyber just onto maybe businesses that previously didn't need a cyber policy, but now everything's in the cloud or databases? Kind of what are your opinions on cyber for BII and extensions? I think
cyber is applicable to a lot of businesses out there that don't necessarily think that they've got a cyber risk. You think about the amount of information's up in the cloud. I think cyber is a conversation that every broker should have, at least to start. Maybe the client doesn't buy it today, but he buys it 2 or 3 years down. I mean, oftentimes that's how it works with insureds and those relationships. Is you start to you drip feed with, hey, is this something we need to be looking at? And the client may say, well, no, I don't think we've got a risk there, but it's something you keep bringing up and addressing. And I think eventually you'll get there. And I think it's just working through that. So much of selling insurance is understanding exposures and having those conversations. So I think for sure it should always be a conversation. And I think that's one of the things that came out of the pandemic too. I think, to be honest, one of the things that came out of the business side is a realization that they didn't understand how their policies work, didn't understand that the coverage is ring-fenced in the policy by certain perils, exclusions, things that needed to be met in order for the coverage to be triggered. And so I think they're going forward, there's going to be more of an expectation to understand how it all works. And I think that, and how brokers manage that, I think a lot of brokers really did manage that well. I think is how they got over this. I think Brooke Hunter in the CEO panel talked about how it was such a big brand hit, this broker, this BI that affected everyone but wasn't being covered. And so I think being able to talk through that and address those issues is such an important skill and tool, important aspect for brokers to address.
Yeah, I think that's the hardest part of being a broker is you kind of have to tell people, sell them on a problem that might not ever happen, and hopefully they go for it. And then the flip side is what's happening now is when those catastrophes do actually pop up, everyone's mad they didn't check that box and take that piece of the policy, right?
There's two things on that. One is tell that to Wimbledon, right, and their event cancellation that finally paid out. But it's interesting. It's back to that pandemic being at the bottom of that Allianz barometer scale. I mean, the risk was there. Everyone knew the risk was there, and I think you still need to address and speak to those things, even if ultimately you don't sell a policy. I think there's an expectation to talk to some of those things.
And actually, you mentioned another test case, FCA out of the UK there. I was just curious, is there any other major cases you're keeping an eye on abroad or even here in North America that are going to have bigger implications for the whole market?
I think there's a few going on in Canada. I'd have to think of what some of the names are. So we could certainly, if people want to know, send me a note. But there's a few class actions. A lot of them I think stem from the industries that were hit hardest, the hotels, the restaurants. We're seeing that. I think there's class actions for a lot of those industries because they're suffering the most from this hard market as well. Hospitality is really struggling, and so I think there's a few cases out there. If you Google it, they're easy to find. But I think those are the ones I would really pay attention to. I think ultimately, I think there's when situations like this happen, there's always going to be an onslaught of litigation. I think the U.S. has thousands and thousands of claims. And I think some of those are even, not to scare the brokers, but I think some people even try the broker angle. Hey, I wasn't informed of how my policy worked or what my true exposure was. I mean, I think there's a sound argument that very few businesses would have bought the coverage even if it was there. I'm not sure how it would have been priced, but lawsuits are inevitable when you have a situation like this.
Yeah, I kind of see the ability that if the price was too much, they probably wouldn't have bought it, but now they're upset they didn't have it to begin with, right? So,
well, and I think I would have been one of those people sitting there going, "Pandemic, yes, okay." And I remember being at one of the risk insurance management talks about pandemics, and I think it was talking from the perspective of it was someone at TELUS or one of the big communication companies. I don't remember, and they were talking about pandemic, and I remember thinking how interesting it all was, but how far-fetched it was. And they talked about how something occurring with problems with communication systems that across the board, losing communication systems and all that for some big major event, and then it's happened. I think it's so interesting. And I think that presentation was probably 10 years ago now, and I mean that whole concept is just so much bigger now. And again, integration, interconnectivity. I think all of this it's even a bigger exposure, but it's interesting.
You kind of need it to happen in order for people to take notice. I think here in Calgary, I don't think ever since the floods, you don't have a conversation that doesn't revolve around flood as a risk, right? So, 10 years ago, thought about it, but now it's in everyone's thoughts all the time, right? Yeah. Nick, real quick, how do people get in touch with you and kind of chat about BII with you? Do you want them to reach out to you in online, LinkedIn? What's the best way to get a hold of you?
I'm on I'm on all of it. I'm really trying to develop that LinkedIn profile a little bit more. Kind of pushes me out of my comfort zone into that marketing world. But yeah, reach out to me there. My contact details on the screen. I love to have these conversations. As I say, it's insurance is an art, and applying the coverage to different situations and businesses and contexts, I find super interesting. So love to chat about that stuff. So anyone who has a client or has a situation they want to work through, love to have those conversations. And even if I don't have the answer at hand, I like to think about these theoreticals or hypothetical situations and work them through. So
awesome. Well, thank you very much, Nick. We really appreciate the talk today and your time. I want to thank our sponsor, Walbanesa, for sponsoring the session. We're going to take a really quick break, and then everyone come back here in 5 minutes. We have our next presentation. It's all about recruitment and making sure you get the right people in the seats for your insurance company. Thanks.